and from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner, for 5 minutes.
I thank you, Chairman McHenry. And Chair Powell, welcome. Thank you for your service and for being here today. Yesterday, I was pleased to hear you discuss how inflation is severely hurting the working people in America. In your testimony, you also state that strong wage growth is good for workers, but only if it is not eroded by inflation. And that is key. Inflation is a tax, a hidden tax on every American. If the Federal Reserve were to shirk its mandates to stabilize prices, leaving inflation alarmingly high, what would it cost America's hard-working families in Missouri's 2nd Congressional District and beyond?
So I think the costs of failure to restore price stability would be extremely high, and while there will be costs to success, the costs of failure will be much higher. You'd be looking at an extended period where people learn to expect and live with high and volatile inflation, and it's very, very hard to have rising real incomes during such a period. So it'd be a bad thing for the country.
Can you reassure the committee that the Fed remains committed to bringing prices down for our constituents?
Yes, I do.
Thank you.
I hereby assure you.
And changing topics here a bit, as China's economy reopens and about 18% of the world's population resumes its consumption of oil and other key goods, what sort of inflationary impact will we see here in the United States, sir?
So a faster reopening of China, which it looks like we may be seeing, it does have the potential to put upward pressure on commodity prices, but it also would mean a faster sort of unraveling of the problems in supply chain. So those would be offsetting effects. I think sitting here today, we don't expect the net effect to be big. For the United States, it might be bigger for other parts of the world, but we think it ought to be moderate overall.
Well, China is one of the world's top oil importers. And do you expect any inflationary effects on global energy markets as China's oil consumption returns to their previous levels?
So I think oil prices could be affected, and I think that's a big concern in Europe, for example. We have our own domestic oil, and we've got a lot of natural gas as well.
We sure do. I wish we were actually harvesting more of that liquid natural gas. Chair Powell, you, Vice Chair Barr, and many others have recently identified that the banking system is well capitalized and strong. Bank capitalization remained robust during the shock of the pandemic and related shutdowns of economic activity. Capitalization of large financial institutions weathered severe stress testing mandated by the Fed. And despite all of that, as also previously mentioned by Chairman McHenry, Vice Chair Barr insists on conducting a review of capital rules. I'm concerned that this review is being conducted in a silo, and that the findings will not be made fully available to the public. Taking such an approach in the context of this holistic capital requirement review would make it impossible to conduct a transparent rulemaking process, denying the public information necessary to consider and to comment. I think this is just simply not appropriate in this situation, and I'm concerned by the lack of clarity, I think is the best word, perhaps at this point, by the Vice Chair. A couple questions. You've served on the Fed board for over 10 years since the financial crisis regulatory framework has been put in place. And over that period, have you seen any real-world evidence that America's banks are undercapitalized?
So American banks are strongly capitalized, and I believe Vice Chair Barr has said that as well. But
yes.
The point is there haven't been any real proposals to evaluate yet, and when there are, that will be done in a highly transparent manner.
I hope so. I'm glad to hear you say in a highly transparent manner. Do you agree that excessively high capital levels constrain banks' lending capacity with spillover effects on jobs and living standards for Americans.
So I think it's always a balance, right? More capital means more safety and soundness and more ability to withstand terribly stressful periods. But it also, it's more expensive. Equity capital is more expensive. U.S. banks have competed incredibly well around the world
Yes,
with
they have,
high levels of
internationally.
capital. But so that's a trade-off that you're always going to be making when you think about capital.
Gentlewoman's
My
time
time
has
has
expired.
expired. Yes, thank you.
We'll now
Madam
recognize the gentlewoman from Ohio, the chair